Welcome back. You're watching Lunch Money in the midst of earnings season. We've got NIIT's numbers out. This is a standalone education arm of NIIT after the restructuring. The stock is down about 0.5%. The numbers are out. Q2 profit after tax came in up 38.3% at 7.3 crores, and net sales, there's been a little bit of a change in the numbers. We've also got the net sales figures, which is coming at 108 crores. Rohit Gupta, Chief Finance Officer at NIIT, joins us now. Rohit, thanks for joining us. We've not been able to really compare the numbers because this is just the second quarter of the standalone. But take us through what the key takeaways has been for this quarter, and what is the picture looking like for the next two?
Hi, good afternoon, Mini. First of all, we actually discussed the consolidated financials for NIIT Limited. And I think what you are referring to are the standalone numbers.
Yes.
So what I will do is I will give you the consolidated financials, because that is what we discussed in our quarterly results. So NIIT in Q2 has seen a 5% growth in the revenues, and the revenues for the Q2 are 272.5 crores, up 5% year on year. However, on a go-forward basis, we have a revenue growth of 13%. That is, if you exclude the businesses that we have stopped doing, or the ones we are exiting in the restructuring phase, which was completed last year. Our EBITDA is at 25.2 crores, which is an EBITDA margin of 9%, up 230 basis points as against last year. And our consolidated PAT is at 20.8 crores as against about 10 crores last year, same quarter, which is up by 102%. So these are the consolidated financials for NIIT Limited. And I think if we can talk about the consolidated financials, it would have much more meaning.
What's the picture looking like, Rohit, going into the next two quarters, especially given that, I'm sure that the restructuring is, still settling down, and you will be looking at aggressive growth avenues?
We had business transformation last year, which we undertook in 3 phases. The restructuring phase started in October 2014. And we completed the restructuring in Q4 of last year. The restructuring primarily pertained to consolidation of our people and premises. We also rationalized our products, and we exited some low-margin products and geographies. The second phase, which was quickly initiated, was the re-energizing phase in April 2015. And what we have now entered into is the renewal phase, which is enabled by technology transformations. And there are a number of initiatives that we have taken in this quarter, in this new renewal phase. So, for instance, we have launched StackRoute, and StackRoute is our pioneering initiative, which aims to scale, the programmers into full stack programmers. And this is basically creating multi-skilled and multidisciplinary programmers who can become key members of top performing startup companies and product engineering companies and IT firms. Here we had a very rigorous selection process, and the first batch was commenced in October this year. We actually got this oversubscribed. The first batch was oversubscribed, and we have a committed order book. So this is one of our initiatives. The second initiative that we have taken is the launch of NIIT TV, and NIIT TV is a learning platform which we have launched, where NIIT offers skills courses to the entire India. So here we are offering live skill courses and also on-demand courses to any person who is digitally connected. And this is truly a disruption in the education sector.
Fair enough. Fair enough, Rohit. What are the prospects going forward into the new quarter in terms of both expansion plans and investments? What can you share with us?
See, we've seen growth in our skills and career business after 37 quarters. And, our corporate learning group is also it is showing very strong performance. It is growing at about 15% year on year. We believe with the turnaround that we are seeing in the skills and career business and continued rock-steady performance of corporate learning group business enabled by the technology transformation that we are doing.
Right. Rohit, I would request you to hold your thoughts. I'm sorry to butt in. I'd request you to hold your thoughts, but we are just getting a live feed of Aditya Ghosh from Indigo. Lots of questions raised on the IPO and the changes over there, but let's listen into what he has to say.
और बाकी जो है वो 34 करोड़ कुछ ground services.
Right. So that's Aditya Ghosh talking about a lot of the issues that have been raised on the dividend payout to the promoters in the run-up to the IPO, on the issue of the negative net worth and why the company which has made so much of profit has gone into a negative net worth, and of course on the order book as far as the new aircraft is concerned. So that's Aditya Ghosh talking about all of that, and those are some of the concerns that have been raised. We've got Rohit Gupta, Chief Financial Officer of NIIT. Rohit, I'm so sorry I had to button over there. I'm going to ask you one last question very quickly. What can investors expect from NIIT going forward in the next 2 quarters?
Our expectation is that our corporate business is going to grow, continue to grow at 15% with a steady margin of 12%. Our skills and career business, we had said we will bring it back to growth. We have achieved it in H1 itself, and we believe that for the full year, we will have a back to growth story. Second quarter, of course, for the skills and career business is the strong quarter. We also said that in skills and career business, we will be back to profit, and this quarter we are seeing a 7% margin up from 3% last year. So what I would say is in the next 2 quarters as well, we will continue to perform in the same manner. However, the quarter 2 has a seasonality aspect, which of course is reflected on a year basis.
Right, Rohit, thanks so much for joining us and taking us through the plans for NIIT. I really appreciate you joining us. The stock, meanwhile, is down about 0.75%. We've also got M&M financials numbers coming out, and it's not a very good set of numbers, and the stock is down about 1.5% on the back of that. In fact, if we can just get you those earning numbers, it'll show you that profit after tax is coming at